You're watching Business Incorporated live from Channels HQ. Coming up, as Ghana's debt restructuring plan moves on, G20 creditors agree to debt relief talks. And Russia's central bank includes Egyptian pound in its official exchange rates list. Plus, gold darts towards fifth weekly rise in slower rate hike hopes. Hello and welcome to the program. I'm Ladi Williams. Great to have you join us. Let's take a look at how your money is performing at intraday for the final trading day of the week. Let's start with the African continent. There we see it's mostly positive sentiment on the African continent, but the NGX negative territory there, 0.02% marginal, but could turn before the close of trade today. See South Africa GSE index 73,554 points, continuing the intraday bullish run we saw yesterday. It's up. Egypt EGX 30, that's trading up 0.49%, holding that 16,000 level strongly. And we see Kenya close positive yesterday, up 2.37%, a big move up. And for more now, let's take a look at what's happening with Nairobi Exchange there. It's at crosshairs as market remains volatile. Let's talk to Jesse Ludeyo now, lead analyst at Amana Capital, joining us from Nairobi. Great to have you on the program.
Thank you for having me, Ladi. How are you?
I'm fine, thank you. So we got that bullish close yesterday, but the all-share index has been, on a kind of a downtrend. It did fall below 120 points earlier this week. What's driving sentiment in that market?
Well, you put it quite rightly. The NSE all-share index has been on a general decline throughout not only 2023 but also in 2021, reporting on a year-to-date basis about a decline of about 4%. But one thing we have to put into context when looking at the NSE is the fact that it is highly it's generally a market-weighted index, and being a market-weighted index means that stocks that have got large market capitalizations tend to aggregate larger into the final value or the final performance of the index. And one of these stocks is what we call a Safaricom. So if you look at generally the performance of Safaricom as a counter, it has generally been on a decline due to various macroeconomic and also industry specific factors and also company specific factors, and these are largely seeped into the NSE all share index, and it has affected its performance all through.
All right, what are you expecting for 2023 for the Nairobi Stock Exchange all share index?
So expectations are largely based on major factors that have been affecting the market. One has been like I said, the fact that it is overweighted by Safaricom as a counter. Secondly, has been the fact that investors have been shying off the markets through capital flight as a result of increased rates in the developed economies. So we are expecting that as long as the Fed keeps on increasing rates, they will be skewed towards they will skew the investments towards such foreign markets. But however, given that we are seeing signs or telltale signs of the Fed probably coming to the end of that, then we might likely see more foreign investors begin to seep back into the country and begin to seep back into the markets. Now, the third factor that has been an influencing factor has been the fact that the government has also been raising rates on the fixed income markets. So that also contributes to further reallocation of capital towards such kind of markets. But now, as the government has been keen on insisting that it's no longer going to allow rates to go on an uncontrollable rate, so that meant encourage us towards the third and fourth quarter of the year. But Ladi, as you know, the past 2 years have been evidence enough for us to know that a year can begin quite positive, but by the month of March, things might take a spiral turn. So we'd rather take a more short-term look in terms of quarter-on-quarter basis.
Right, and obviously investors globally, all eyes on the central bankers in 2023. Thank you so much, Jesse Ludeyo, lead analyst at Amana Capital. Thank you.
Thank you very much for having me, Ladi.
All right, now let's head on to the Middle East. There we see sentiments were mixed in the United Arab Emirates. There we see it, Abu Dhabi, that's down by 0.12%. And Dubai index, that's up 0.10%. On flip side there, 3,356 points. And we see the Qatari index close yesterday up 2.12%, a big move after closing intraday in the red. And we see Saudi Arabia, 10,682 points. That's closed up 0.17%. So it's not looking bad in other parts of Middle Eastern markets that we track. Let's head on to Europe now. We see the world's political and economic elite are gathered in Davos for one last day. That's today at a time where globalization as a model has been called into question, and the World Economic Forum itself has struggled to prove relevance amid a shrinking guest list of movers and shakers. Let's talk to Janelle Dumoulin from Berlin now. Great to have you, Janelle. So what were some of the major highlights for you?
Yes, while Davos is still a glittering event, there was a noticeable gap in the presence of world leaders from the world's biggest economies. No Joe Biden, no Xi Jinping, no Emmanuel Macron. Really, Olaf Scholz was the only G7 leader present in Davos this time around. But obviously, this is still an event where globally significant topics are tabled, like the war in Ukraine, with Ukrainian leader Volodymyr Zelensky calling on world powers for more aid, especially Germany, as they want its Leopard 2 tanks. Talking about climate change at the forum was also unavoidable. Swedish climate activist Greta Thunberg severely criticized business and political leaders in attendance in Davos, saying it is absurd to listen to them while they fuel the destruction of the planet. European and US trade officials also had the opportunity to have an exchange over the Inflation Reduction Act, the American push to subsidize green industry that's caused fears of market distortion in Europe. That said, however, the forum does have to make changes if it wants to continue to hold the world's interest. Its reputation as a gathering of the world's elite does not send perhaps the most popular message at this particular moment, where there's a cost of living crisis in many parts of the world and where key decision makers, many of them gathered in Davos, made policies and created business models that made them winners but created a lot of losers.
But surely, Janelle, this event is clearly a draw for many still. One country delegation has attracted a lot of attention and potential investment. Which one?
That country delegation would be India. Although President Narendra Modi is not at Davos and is busy at home, also thought to be dealing with the death of his mother last month, India has come to the forum with an especially large delegation with nearly a dozen stands as they seek investment in Davos. And there's been a lot of interest in India at the World Economic Forum. In particular, DW spoke to a representative from the Indian delegation who said that for his state alone, Maharashtra, some $17 billion worth of deals were on the table. What appears to be happening is that India is taking advantage of a particular moment where China is facing headwinds. India wants to overtake China as the world's manufacturing hub. One area where India is expected to take the lead is in sheer manpower. The country has a working age population that could hit more than 1 billion over the next decade. That's as China's population declines and ages. That India is also a democracy, while China and the threat it poses to, say, Taiwan, makes world leaders aware of the challenges of doing business with an autocracy, not particularly shy to tread on the world order. That is surely another thing that is on investors' minds when they approach India, as they have done in their numbers in Switzerland this week.
And finally, it's Friday. Give us a review of European markets this week.
Indeed, finally Friday. This week on European markets actually started on a pretty upbeat note. That's after positive inflation data came out of the United States late last week and tempered recession fears somewhat. And that continued on with the Bank of Japan keeping its policy settings unchanged. Germany and the UK also both released their inflation data this week, both showing drops in December. But the week actually soured for markets from yesterday after December retail data out of the United States again showed weakening consumption, and it brought back those recession concerns that we were talking about earlier. Eurostat also released Eurozone growth figures for the third quarter of last year, showing a slight uptick of 0.3% as energy prices go down somewhat. But analysts, of course, warning that the Eurozone isn't by any means out of the woods, that especially the divergence in economic performance is something that could be concerning, with Spain, for example, expected to outperform Germany, with Italy especially struggling, and so on. France today also remains crippled by wide-ranging public strikes. Investors here in Europe remain concerned that the Federal Reserve will continue to hike interest rates despite signs inflation could be slowing. And that wraps up this week here in Europe.
All right, thank you so much. I guess it's still cautious optimism in those markets. Thank you, Janelle Dumoulin. Let's move on now to the UK. We got some data earlier today, and we have Juliana to break that down for us. Great to have you, Juliana. So data from the Office for National Statistics show that retail sales fell by 1% in December. Quite unexpected. Seems shoppers getting cost conscious.
Yeah, you're absolutely right. Good afternoon, Laddie. I think unexpected is exactly the term that not only the UK Chancellor Jeremy Hunt, but also economists in the UK would describe the data that was released this morning from the Office for National Statistics, outlining just how much consumers spent in the month of December. It dipped 1%, and it actually dipped 5.3% if you compare Christmas 2022 to Christmas 2021, bearing in mind as well that we were locked down pretty early in December because of Omicron last year, but consumers spent more. And why did they spend more? Because inflation was nowhere near as high as it was during the festive period. The festive period in this country and across the world is the most crucial period for retailers, particularly retailers that have struggled during the pandemic. Over the past couple of weeks, we have had pretty promising data, not just from Kantar, which is a kind of retail consultancy firm looking at the numbers, but also from the retailers themselves, the big four grocers, Tesco, Morrisons, Asda, Sainsbury's, all showing robust sales volumes during that month, and also from some other retailers too. But then all you need to do is just kind of scratch beneath the surface a little bit, and a lot of those volumes are likely to do with the fact that things are just costing more, so people weren't actually buying more. It's just that, you know, they were taking more in the tills because these are high ticket items. But then again, if you look at the backdrop of what people were going into with Christmas, high energy bills, high inflation, low pay at the moment, you can really kind of see that, yes, of course, retail sales were going to have dipped in December. And I think now it's cause for concern about whether or not we are going to get out of this recession. Yes, technically, we managed to skim past it, and we think we will skim past it when GDP for the entire year is revealed much later in February. But yes, not great news for beleaguered retailers who had hoped that they managed to skimp out of some pretty difficult times. It is likely to continue like this for weeks and months to come.
Right, because December is known for, you know, all that spending, but that's coming out different for this December. But how are the markets looking today, you know, last trading day for the week?
It is the last trading day of the week, and the FTSE All-Share is in the green. No sign of red at the moment. I think that's got lots to do with the fact that a barrel of Brent crude is climbing high, continuing to climb high. That's lifted up the blue chip index at intraday. The All-Share is up 0.40%. The FTSE 100, that's up 0.29%. And the FTSE 250 is up 0.41%. In the currencies market, the British pound is currently trading down against the US dollar by 0.24%. Down 2 against the euro by 0.25%, but trading up against the Japanese yen by 0.67%, Laddie.
All right, Juliana, thank you so much. I will see you next week. Enjoy the weekend.
Thank you very much.
All right, now let's take a look at what's happening in Asia. See markets in Asia Pacific also in the green, all across board. Investors digested Japan's inflation data. The nationwide core consumer price index that rose 4% in December on an annualized basis, the fastest pace since 1981. Nikkei 225 gained 0.56% to close its session at 26,553 points, and the Topix traded 0.59% higher to end at 1,928 points. The yield on the 10-year Japanese government bond slightly fell 0.386%, falling further below the central bank's upper ceiling of its tolerance range. I will take a break now. When we come back, more stories on the African continent. Do stay with us. Welcome back. Still watching Business Incorporated. Let's take a look at what's happening with U.S. markets. Now, we see stock futures were a little changed today as investors try to hang on to the January rally amid worries about monetary policy and slowing earnings. Futures tied to the Dow Jones Industrial Average did about 14 points, less than 0.1%. And we see the S&P 500 there, that's 3,922 points. That's up 0.18%. And the NASDAQ composite there, 11,407 points. That's up about 0.45%. We're interested to see how that closes today. But let's get a summary of yesterday's close from our correspondent, Maria Bird.
Had bad news along with the U.S. economy on Thursday. As the U.S. economy is struggling, the U.S. stock market is also taking a hit. The Dow Jones was down by 0.76%, the S&P 500 down by 0.76%, and the heavy tech Nasdaq was down by 0.96%. The U.S. debt ceiling is causing a major crisis and is beginning to impact the U.S. stock market. It is clear that investors are also watching to see what the Federal Reserve Bank does and if they will continue to increase interest rates. This could have a lasting effect on the U.S. stock market.
All right, be watching out for that next. We see how the markets play out. But let's move on to East Africa now. We see Kenya plans to link its tax collection system to mobile financial platforms to weed out tax evaders and boost revenue by billions of shillings, part of a raft of measures to repair its coffers. Let's talk to Matt Kindigan now, practice leader, Sub-Saharan Africa, front of you. Great to have you, Matt.
Hi, thanks for having me on the show today.
So how effective will these new tax collection measures be at improving, revenues for the country?
Well, certainly it's a positive move. It will improve tax revenue for Kenya, but I would say it's probably going to be moderately successful in the short term. Often these measures to implement broader tax collection and clamp down on tax evasion and avoidance are moderately successful. There have been many examples in recent years from other African countries where the revenues generated from these measures kind of undershoot expectations. However, we certainly would expect the government to continue to pursue these measures or similar measures over the next year or so, simply because public finances are in a pretty tight position at the moment in Kenya. We're also likely to see, in particular, a broadening of the tax base, further tax hikes, as the government tries to raise revenue and stabilize public finances. And the new government under William Ruto has the political space to do this. He doesn't have to fight an election for at least another 4 years. And so he's probably going to be more likely to take difficult measures to introduce painful tax increases over the next couple of years to stabilize public finances.
And they're also looking at, cutting borrowing. At this time, how realistic is that for the economy?
Probably not very likely. The government wants to stabilize its public finances overall, but being able to cut borrowing does require tax increases. It does require spending cuts. And we do actually expect the government to fail to fulfill its spending plans for its 2022-2023 budget as it currently is planned. So if it does want to reduce borrowing, it will need to cut back on its spending ambitions. There are several double-digit increases the government was planning for certain functions in government, including infrastructure, healthcare, education. So certainly we would need to see much less ambitious increases to government spending and investment if the government wants to reduce its borrowing.
And obviously all of this will impact the Kenyan shilling going forward. What are you expecting?
Yeah, so the Kenyan shilling has actually lost more value than we were previously expecting. So the shilling is trading close to 123, 124 per dollar at the moment. We were expecting the shilling to average that amount in 2023 just a few months ago. So now we are forecasting the shilling to end the year at close to 140 per dollar. And part of the reason, it's part of the reason is that lots of emerging market currencies are facing pressure from a very strong dollar generally, rising interest rates in the US. But in Kenya's case, investors are very concerned that the fiscal situation is not yet under control. There's been quite a lot of pressure on the government to demonstrate that it will be consolidating public finances. And until this is the case, we're probably going to see pretty steady downward pressure on the shilling, more so than in other emerging markets. So certainly the next 3 to 6 months will be really important in terms of the government's demonstrating its commitment to fiscal prudence in order to ensure that the shilling remains more stable.
And looking at, sub-Saharan Africa, as a whole, how do you think, the region can cut, borrowing realistically in 2023?
Yeah, so the region does need to, governments across Africa do need to make sure that they are looking at their borrowing very carefully and reducing borrowing wherever possible, simply because debt servicing costs are rising because global interest rates are rising. So certainly there is significant pressure there. Whether or not they're going to be successful is a big question. We've seen a couple of cautionary tales recently. Ghana is effectively defaulting on its external debts. We don't necessarily see this being repeated across the region, and this is because we are going to see the IMF become quite forthcoming in providing support. But unless governments are able to introduce tax increases and very painful spending cuts, then cutting borrowing is not going to be as easy as they would like it to be. So certainly we do expect to see pressure to reduce borrowing, but we don't necessarily see it materializing as quickly as we would like.
All right, thank you so much, Matt Kenga, practice leader, Sub-Saharan Africa, front of you. Enjoy your weekend. Thank you.
Thank you. You as well.
All right, now let's move on now to West Africa. We see all members, countries of the G20 group of economic powers are on board for a restructuring of Ghana's debt. The Paris Club members are ready to take the first step towards forming a creditor committee. And Ghana last week requested a restructuring of debt it owes to other governments, becoming the fourth country after Chad, Ethiopia, and Zambia to do so under G20 Common Framework. The program, which was launched in 2020, was supposed to streamline the process of coordinating among creditor governments and restructuring of low-income countries' debts after the pandemic. And Russia's central bank has included the Egyptian pound in its list of currencies. It sets the official exchange rate for, that was earlier this week. According to the regulator, the central bank said it would now set daily official exchange rates for the ruble against 9 currencies, including the Egyptian pound, the Emirati dirham, the Thai baht, and the Indonesian rupiah. The first official exchange rates would be set on Wednesday. The statement added that the additions take the total number of the currency's central bank set official daily rates to 43, and the other currency pairs to be included are the Vietnamese dong, the Serbian dinar, New Zealand dollar, the Georgian lari, and the Qatari rial. Russian ruble traded around 0.43 against the Egyptian pound. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Enjoy the weekend.